Assalamualaikum and good day to all of you. This is about topic 2. About Bank Negara Malaysia, which is Central Banks of Malaysia. Perhaps after we finish this chapter, you know what is the function of central banks and how they use monetary policy to helps in the growth of economics or economic conditions, and you also need to know about the sources and the uses of funds of Bank Negara Malaysia and how acts related to Bank Negara Malaysia. Some overview about Bank Negara Malaysia. You can also check if you want to know about the details about Bank Negara Malaysia. We are established at January 26 on 1959, which is 2 years after Malaysian independence. And the main reason, is to manage countries' credit situations. About financing, people, money supply, money demands. To manage the money supply, money demand, or credit situation in our country. Not only our country, this also the same function of central banks in other country also. When central banks or Bank Negara Malaysia established in Malaysia, actually is governed under Central Banks Malaysian Acts, 1959. Currently we revise the Acts, Central Bank of Malaysia Acts 2009. So another things that central banks does to controls and supervise the institution under banking systems. So central bank will regulate all the financial institutions and supervise them, and also non-bank. Some of non-bank financial intermediaries or NBFI also regulates under BNM and supervise under BNMs. And the objective of BNMs actually is similar to the function of BNM, Central Banks of Malaysia. We will discuss detail in the future slides. But basically the objectives are related to ensure the currency, Malaysian currency, and keeps reserve, safeguarding of reserve to ensure that our currency value, not depreciates, in a good conditions. And then the objective of BNM also as a financial advisor or agent to government. Similar like how commercial banks manage individual accounts. BNMs, they manage government accounts. And then the third objective, monetary stability. To promote monetary stability and sound financial structure. So how? Basically they use the monetary policy. This one we learn details in the future slides. And then to influence the credit situations to the advantage of the country. To influence credit situation to the advisor of the country, because if anything happen, either Malaysia short supply of credit, meaning short supply of funds in the markets, what central bank need to do to ensure the credits are stable in the markets. Okay, so this one we will related to the 5 function of the central banks, where we will talk later. Okay. Okay, this is a function of Central Bank of Malaysia. Make sure you understand all these functions. It's actually related to the objective of the bank, the 4 objectives just now, but that's why you need to focus more on the function. Make sure you know how to explain. Okay, usually my test 1 or test 2, you need to understand this function so you can answer the subjective questions. Okay, we have central banks development have 5 functions, which is bank of currency issue. This is related to the objective number 1 just now. Okay, and then keeper of international reserve. Okay, and the third functions are governments, banker and advisor. Okay, and then responsibility for monetary policy, and then banker to the banks. Okay. Okay, next slide we will discuss in detail one by one of these functions. Okay, please make sure you understand it. Okay. Okay, for the function number 1 just now, banker for currency issue. Okay, Central Bank of Malaysia. Okay, which is Bank Negara Malaysia, the only institutions. Okay, the only situations as sole currency issuing authority in the country. Only central banks, only BNMs can issue the currency of Malaysians. Okay, either ringgit Malaysia, notes, or cent. Okay, so this is based on the Central Bank Act 1958. Okay, the central bank commenced to issue its own currency starting 1967, replacing the currency board. So when we first time or at the beginning of central banks or BNM operations, we use currency boards, and only 8 years after the establishment of Bank Negara Malaysia, okay, Malaysia have their own currency, which is ringgit Malaysia. Okay. Next is the function number 2. Okay, the second function of Bank Negara Malaysia as a keeper of international reserve and safeguarding value of ringgits. Okay, so this also relates to the objective number 1 just now. Okay, how BNM, Bank Negara Malaysia, being a keeper for international reserve. Okay, what BNM do, they holding the country official external reserve centralized at the central banks. Okay, so when they hold this reserve, okay, some of it they put as a international reserve. Okay, okay, commercial banks, okay, they also put reserve at the central banks. Okay, and central bank also have their own reserve. Okay, and the reserve in the central bank itself, or also they put reserve in internationals. Okay, external reserve. Okay, so the international reserve basically like gold. You have heard, right? Our gold reserve, foreign exchange also is including under international reserve. Reserve, a cash reserve with IMF, and special drawing rights. Okay, for your knowledge, special drawing right is is also reserved with IMF. It's like certificates. Okay, issued by IMF. When we buy the certificates, meaning we put reserves in the IMF. Okay, so this reserve always fluctuate, depends on our economic conditions. Okay, so basically to ensure that our ringgit measure in a good condition, to safeguard the external value of ringgit measure not depreciates compared to other currency. Okay, Bank Negara Malaysia should maintain 80% of currency issue, okay, as a external reserve. For example, if Bank Negara Malaysia issue about 100,000, example, okay, I think more than that, okay, when they issue 100,000 ringgit Malaysia, okay, new issue, okay, they print, okay, so what they need to do, 100,000, right, 80,000 should be put in the external reserve, should be put in the international reserve. So that's to maintain the value of our ringgit Malaysia. Okay, have you heard that ringgit Malaysia depreciate because of our gold reserve or our international reserve reduce? Okay, why or how it relates? Okay, this is like this. Okay, okay, when when our ringgit depreciates, okay, when our ringgit depreciates, okay, Bank Negara Malaysia should use the international reserve in IMF, okay, in the international market, in the world market. They use that, okay, to buy our ringgit Malaysia, okay, using the foreign currency, using the gold, okay, usually using the other foreign currency, okay, to buy the ringgit Malaysia. Okay, when they buy the ringgit Malaysia, meaning they increase the demand of ringgit Malaysia. So when increase the demand of ringgit Malaysia, what happened to value of ringgit Malaysia? Appreciate, right? Okay, so that happens, okay, when we have enough international reserve, okay. But if we do not have enough international reserve, and suddenly because of economic conditions, our ringgit Malaysia depreciates, okay, and we do not have enough international reserve to buy back our ringgit Malaysia in the markets, okay, so that's why our ringgit Malaysia no demands, okay, and a lot of our ringgit Malaysia in the markets, so no demand, so it keep depreciates, the value keep depreciates, okay. That's why Bank Negara Malaysia or central bank, they should, okay, have adequate, okay, adequate international reserve to ensure the safeguarding of ringgit value. So if ringgit value depreciates, okay, we should, BNM should buy back using international reserve to ensure high demand of ringgit Malaysia, and this will increase back the value of ringgit Malaysia or appreciate back the value of ringgit Malaysia. That's why there is a news when mentioned about our ringgit Malaysia depreciates, they links because we don't have enough international reserve, because we don't have or we have lower international reserve. It's related, okay. If lower international reserve, it will affect our ringgit Malaysia or currency value. And then the third functions of Bank Negara Malaysia as a government banker and financial advisor to Malaysian governments, okay. This concept is similar like how commercial banks manage individuals' accounts, okay. So Bank Negara Malaysia, they will manage government's accounts, okay, in and out, okay. So how they manage, okay. So basically, central bank will act as a banker, fiscal agent, and financial advisor to the government, okay. Fiscal agents in buying, selling of government paper, T-bills, T-bonds, okay, they play the roles, okay. Central bank also responsible as fiscal agent to the government, include acting on behalf of governments in public loan program, including internal and external loans. Internal loan meaning loan come from the nations, external loans are borrowing from other country, okay. Maybe governments issue bonds, okay, they issue and invest by other country or international banks or other government's country, okay. That's we call external loans. So how they being a banker to the government? Number one, manage the government accounts. How they manage government accounts? Okay, they manage government accounts. As I mentioned just now, same function as commercial bank perform to their customer. So keep the money for the government. If the government want to withdraw money, they will process it, okay, and then offer how to invest the money for the governments, okay. And then the second, as a source of funds to the government. How central bank can be source of fund to the governments, okay, because they provide temporary advance to the government to cover any deficit in budgets. How? Okay, for example, every year there is a budgeting, right? Okay, so when budgeting, you can see government will propose where they will get money to cover the expenses of the government, okay, from the tax, okay. And then if deficits, where should the government get the money to ensure the budget can perform well, okay, the expenses can be, or the facilities or whatever their budgets can be operates, okay. So if deficit, they can ask or banks or borrow from central banks, okay. How they borrow by from the central banks, okay. Banks, central bank will invest in Malaysian government security, okay. So meaning they lends to the government temporarily, okay. Even though the central bank actually owned by 100% owned by governments, okay, but they are separate entity. So if the government needs money to cover deficit, they will do or borrow money from the banks, central banks, okay. So central banks will invest in Malaysian government security or bond of the Malaysian governments, okay, borrow in that way. Or maybe central bank can ask commercial banks invest in T-bill of the governments, okay. And then the last one, manage of national debts, okay. Sometimes in my question I will ask you explain how central bank being or manage government banks, okay, or act as a government banker. So you need to explain using these three points, okay. Okay, the last points, okay, about management of national debts, okay. So central bank, they will manage and advise on public debt, such as advise government on its loan program, okay. For example, if they need loans, they need money, government need money, so central bank will check whether the loans supposed to be short-term loans or supposed to be long-term loans, okay. So central bank will decide and will advise governments. So either the loan should be offered to the publics, residents, I mean Malaysians only, or should offer to outsider, okay, external loans, okay. How much the loans, okay, how what type of securities paper should government issue, T-bills, T-bond, Malaysian government security. So this will be advised, okay. How many percent interest should or return should government offer if they issue the bonds or securities, government securities. So these all will be advised by central banks to the governments if government need to borrow money from the publics. Okay, the four functions of Bank Negara Malaysia as agency responsible for monetary policy. So, Bank Negara Malaysia will responsible or react to implement monetary policy after discuss with the government to ensure or to improve the economic conditions. Okay, so this means that Bank Negara Malaysia will promote monetary stability and to ensure the sound of financial structure. So our financial system is good. Okay, so how Bank Negara Malaysia will do? By influence credit situation through supply of money and how many volume of credits. So if there is short of supply in the market, so Bank Negara Malaysia will implement monetary policy to increase the supply of money in the markets, and it will affect the volume of credits. Okay, the central bank is obliged to ensure that the supply of money and the volume credit are sufficiently elastic to the demand without pressure on the resources. Okay, meaning that not central bank need to issue new issuings. Okay, by using the monetary policy, it can make the commercial bank maybe have more money. Okay, or publics not demands to the money in the market. So the supply and demand of the money in the market are in good condition, can adjust voluntarily by implementations of monetary policy. So how to do this? Basically based on quantitative and qualitative controls. Okay, so they also manage the banking system. So when central banks, they react as monetary policy responsible agency, basically try to promote monetary stability and sound financial structure, also manage the banking system so that people are confident with our banking system. Okay, so what is the quantitative qualitative control? Make sure you understand this. This is also my favorite questions. How central bank can solve the inflation problems, can solve the economic problems, okay, using the monetary policy, quantitative control or using the qualitative control. Hopefully you can, you know how to explain. Okay, as you can see, monetary policy can be implemented, okay, to control supply or credit situation, supply of money or credit situations. Central bank can using qualitative measure, okay, or quantitative measure. So qualitative measure, okay, there is a lot of way, okay, but in this class we focus 3 on qualitative measure, 3 on quantitative measure. Okay, qualitative measure based on interest rate ceilings, selected credit control and moral situations, while quantitative measure, statutory reserve requirement (SRR), minimum liquidity requirements, or money market operations. Okay, later we will discuss in next slides. Okay. Okay, for qualitative measure, number 1, using interest rate ceilings. Okay, what is interest rate ceilings? Interest rate ceiling when, for example, it involving in setting the minimum lending rate for bank loan. Okay, but ceiling is the highest. Okay, so So usually central bank will mention what is the highest, what is the interest rate ceiling. For example, 5%. Okay, so the banks, they will know what is the lowest or what is the highest rate they can charge to the borrower. Okay, how this affects to the credit situations? You should know this. Okay, because interest rate reflects the cost of fund. If higher interest rate, so cost of financings, for example, like cost of you borrow loans for the housing loan will be increased. Your cost to buy car will be increased because you buy car using borrowing loans and bank charge interest rate. The higher interest rate, the higher you pay the cost of fund that you get to finance your car. Okay, so this is the way, okay, how central bank can affect the money supply or credit situation. For example, if deflation, okay, not there is inflation. What means inflation? Too many money. Okay, inflation, people keep demand, right? People keep demand. What's the price of products keep increasing because there is high demands. Okay, so even though the price is not supposed to be very high, but because of a lot of demands, they keep increasing. That's happened to the housing. Okay, because more demand, the housing price keep increasing. Okay, so people are willing to buy, people want to buy. Okay, so what central bank can do, they increase, okay, they increase the rate, the interest rates. Okay, when they increase the interest rate, what happen? Okay, when people want to buy the house, the cost will be higher, cost of loans will be higher. So this will consequently, people will stop buying house, will stop demand for the house. So it will reduce the price of the house. Okay, and because when people more demand on buying house, maybe they cannot pay the house in the future. This also can make central banks increase the interest rate. So before people buying the house, they know already the rate is higher, so they're reluctant to buy. Okay, so one of the reason when the government measure checks that there is a lot of bad debts, borrower from housing loans are not pay their loans, so they will ask the commercial bank to increase the interest rates. Okay, that's how qualitative measure, not exactly setting how many percent of interest rate, they just give a interest rate ceiling. So it depends on the commercial banks to deal with that, to lower from the interest rate ceiling or to make it a lowest. Okay, so depends on the commercial banks. The other way of qualitative measure are selected credit controls. Okay, what is selected credit control? Is the measure used in regulating the volume and direction of credits. Okay, for examples, suddenly a lot of people apply credit card. Why? Because a lot of fresh graduate, okay, they just work for 1 month, 2 months, and then they apply for credit cards. Okay, a lot of, and then they keep using. Okay, so meaning that the demand from credit very high. Okay, student, fresh graduate, they borrow using credit card very high, and then the volume of the money used in the market very high. Okay, So it will affect the supply of money in the markets. Okay, so it will affect. Okay, so what bank negara will do? Okay, maybe they will give instruction uh, to control the credit card application from the fresh graduates. So they're setting a new requirement. Okay, setting for only annual income 50,000 can apply the credit cards. Okay, and then the requirement age from 21 years old, maybe increase the requirement age to apply credit card is 27. Okay, so this will reduce, okay, the demand of credit cards, the demand of so this is how the way central banks use selected credit control. First, that is to control the credit cards use. Okay, maybe if they've checked lack of or lack of increase of problem in car loans, maybe they will also have new regulation. Okay, only people with 5 years driving license can apply the car loans. So this is like okay, type of selected credit control. For the car loan, they have their own requirement. For the credit cards, they can change the other requirements. Okay, and the last qualitative measure, okay, using in monetary policy are moral suasions. Okay, what is moral suasion? This is like inducing a voluntary response from the financial system to its policy initiative. Okay, this is usually traditional statement BNM techniques to encourage the commercial bank involved in certain policy. For example, because commercial banks are reluctant to give loans to the small business, so one way of moral suasions, central bank have new policy, okay, to encourage the commercial bank lend the money to small business, lend the money to the B40 in applying loans. Okay, so this can improve or can offer more credits at the market to the small business, from the commercial banks to the small business, from the commercial banks to the B40. Okay, so this is a example of moral suasions. Okay, they just give introduce central bank just provide a traditional statement, not force or not a rules. So either commercial bank they want to follow or not, it depends on them. Okay, okay, now is qualitative measure. Okay, so quantitative measure. Just now is quali, now is quantitative, based on certain measurement. Okay, quantitative measure, okay, that you can calculate. Okay, so quantitative measure, in this class we discuss about 3 types of quantitative measure in implementation of monetary policy by central banks. Okay, number 1 is statutory reserve requirements. Okay, what means by statutory reserve requirement? Actually, statutory reserve requirements is the reserve compulsory for every financial institution regulated by Bank Negara Malaysia. Okay, either local or foreign, they need to put reserve in central banks. Okay, the reserve, the more the liability of the bank, the higher the reserve they need to put. Okay, the reserve are based on certain percentage of eligible liability, which is comprised of repurchase agreement, negotiable certificate deposit, and also interbank borrowings. Okay, you can see this one is a liability part of the bank financial statement. So currently the SSR statutory reserve requirement 2% out of the eligible liabilities. So if commercial bank have higher liability, meaning they need to put more, okay, 2% times by the higher liability, more reserve in central banks. Okay, previously we are 3%, but due to the COVID, okay, we reduced 2%. Okay, how this can solve the inflation problems or economic conditions? Okay, we give examples. Okay, when inflations rise, okay, there is more demands. More demand meaning people also willing to buy more things. They want to buy house, and then they don't have money. They will get loan from the banks. Okay, so due to this, Bank Negara Malaysia should reduce the money in the market. Okay, how to reduce the money? To reduce the credit supply in the markets. Okay, so that people not borrow the loans and buy house. Okay, so one of the way they will increase the statutory reserve. Okay, so when central bank increase the statutory reserve to 3%, okay, for example, okay, central bank they need to put their or add more money to the central bank. So money that left in the central bank, in the commercial banks, in the banks, will be reduced. When the money in the commercial bank reduce, they also have reduced their money to lend to the publics. Okay. Okay, I repeat. Okay, if government increase the statutory reserve requirements, okay, meaning that banks they need to put more reserve, okay, from their cash in the banks and add their reserve in the central bank. So the money in the banks are reduced. So this also will affect the reduce of supply of credits to the borrower. Okay, so when lack of money supplies, okay, it will reduce the demands. Okay, when lack of money supplies, okay, bank cannot lend the money to the peoples. Okay, and lack of money supply also can increase the interest rate because demand from the money supply, okay, higher but supply lower, reduce, so can increase the interest rate. Okay, so this consequently will reduce the demand of credit or people borrow money. So this can reduce the demand of housings purchase. Okay, so it will reduce the price of house. Okay, this is examples. Okay, and how about liquidity requirement? Okay, similar. Okay, liquidity requirement also is you can check on the liquidity coverage ratio. Okay, so the banking institution required to observe minimum liquidity ratio. Okay, so central banks, when they supervise commercial bank, they actually commercial bank need to fulfill certain requirement, reserve requirement, liquidity requirements. Okay, I think liquidity requirements about 10%. Okay, okay, so why they need to put 10%? Okay, to at the any times, okay, bank should operate their business to maintain their liquidity ratio follow the liquidity requirements. Okay, why? Because to ensure the bank have money in the bank. Okay, so that if anything or any withdrawal demands, they can use that money to fulfill withdrawal demands. Okay, when the depositor want to withdraw a huge amount of money. So that's the purpose of liquidity requirement by the central banks. Okay, so this also can be applied to the economic to improve the economic conditions. Okay, for examples, okay, if economic too slow, okay, what means by economic too slow? So people not buying, no business, not buying and selling. Okay, so what bank can do? Central bank can do. They should increase the demand for money, increase the supply of money in the markets. Okay, how to increase that? Central bank can change the liquidity requirement, reduce the liquidity requirement rather than 10%, reduce to the 5%. So if banks, okay, only need to fulfill the 5% liquidity ratio requirement asked by central banks, meaning that they can use the extra money, 5% extra money, to lend to the markets, to lend to the publics. Okay, so it will increase the supply of money in the market. Okay, so when increase the supply of money, interest rate will reduce and people will borrow money in the markets, and then the business activity will increase. Okay, when people borrow, when business borrow, they can make business activity. So this can help to improve the economic conditions. Okay, and another way is monetary market operations. Okay, monetary market operations meaning that um, influence the liquidity situation in a system through selling and buying government paper, T-bills or T-bonds. Okay, so this relates back to the liquidity requirement. Liquidity means there is a lot of funds. Okay, so if if the money in the markets if there is a lot of money in the markets, okay, and there is a lot of money in the markets, okay, nobody want to borrow the money in the market. Okay, this also can affect economic conditions, bad economic condition, because no economic activities. Okay, so maybe what they can do, okay, to reduce the money in the markets, okay, central banks will ask, okay, will ask the commercial bank to buy T-bill of the government, to buy the government paper. So when commercial banks, when banks, they use the money, okay, to buy the government paper, okay, meaning they invest in government paper, so it will reduce the money supply in the markets. Okay, so this will also improve the economic conditions. Okay. Okay, next about banker to the banks. How you can explain this? When I ask you how central banks act as a banker to the banks. Okay. Basically, when central banks being a banker to the bank, they need to ensure the banking system sound financial structure. Okay, they need to promote a good financial structure. Okay, to ensure people are confident with the banking system. Okay, for example, anything happen in the securities problem, hacks, uh, money laundering. So central bank will take action on that regulations. Okay, so uh, central bank also give license to banks and non-banks. Then all the banks and NBFI can operate their activity in Malaysia. Okay, and when banks, central banks, they provide license to the commercial banks. Okay, meaning that they manage the relationship among the banks. Okay, because uh, all the bank need to fulfill the requirement, for example SSR requirement just now, liquidity requirement just now. So and then when you transfer money from one bank to another bank, so these regulation introduced by central bank, then you can transfer money from banks to another banks. This can maintain the relationship among the banks under central bank supervisions. Okay, central bank also will distribute currency to all the banks under its supervisions. Okay, so that's why you can see all the currency if compared to other bank, not much difference. The currency exchange not much different because this one are controlled by the Bank Negara Malaysia. Okay, if I mean the distribution of currency, if CIMB Bank get 100,000 of USD, Maybank also get 100,000 of USD, so they cannot get more. Okay, because the distribution of USD come from the central banks. The decision of any other currency also come from the central bank. So they will make sure all the banks or financial institutions supervised by central bank will get similar distribution. So no banks can reduce the currency or increase the currency. Okay, and then because of they give license to the banks and NBFI, central bank will do inspections and investigation from time to time. The reason to ensure that all the banks is follow the regulations. Okay, that's why if you can see if any money laundering or any abnormal transactions, sometimes your account will be blocked. Okay, because there is a system, okay, supervised by central banks. Okay, and of course central bank also the lender of last resort. Okay, if commercial bank or financial institution they cannot get money, cannot borrow money from other institutions, they can borrow money from the central bank. Okay, they borrow actually from the reserve of other banks or reserve of their own banks. Okay, but these borrowings only for the short terms, temporary periods. Okay, so because when they borrow money on this maybe overnight they need to return back, because but most of the bank try not to borrow money from the central bank because it will it portray their image. Maybe central bank will assume that this bank have liquidity problem, this bank have bad performance, so that's why they try to avoid borrow money from the central banks. Okay, lastly, about where central bank get their fund, the source of fund, and what central bank use uh, their funds. Okay, so actually you can see this at the annual report of the Bank Negara Malaysia. Okay, you can see this at the financial statements. You can check, okay, the source of fund usually under liability of the banks. The uses of bank funds is under asset of the bank. So you can check, okay, basically most of Bank Negara Malaysia, the source of funds, not most, the Bank Negara Malaysia, the only Bank Negara Malaysia, their source of fund come from the depositor. Okay, uh, this is liability. Depositor from who? From other financial institutions, not only Malaysian but also foreign financial institutions. Okay, because sometimes um, to integrate the transfer payments of any other bankings. Okay, and then they also get money by borrowing from other institutions. Okay, central bank sometimes borrow money from commercial bank, from other foreign banks. Okay, especially when they want to lend the money to the government of Malaysia. Okay, so when they borrow money, actually sometimes they will use uh, loan security, which is debenture or notes, where the loan security uh, is related to Bank Negara Malaysia paper. Okay, Bank Negara Malaysia paper. So when bank needs money, they can issue Bank Negara Malaysia papers. So people in other institutions invest. So Bank Negara Malaysia get money. So they lend that to the governments. Okay, and of course, the source of Bank Negara Malaysia come from the capitals. 100% capital are come from the Malaysian governments, and reserve from commercial banks, and also Bank Negara reserve, where they generate from the capital, meaning reserve when there is land change value, and then reserve in internationals reserve. Okay, so when they get money, when Bank Negara get funds, usually they are used for loan activity. Okay, they also need to generate some profit from the loan activities. Okay, so they give loans to the financial institutions and also agency or government agency. Okay, so when they give loan, at least they get some income. So this income also will be used for the governments. Okay, and then they use the money similar like commercial banks to pay back their borrowings. Okay, and banks should have use the funds to ensure they have cash in currency, several currency. Okay, and also reserve in international reserve. Okay, and other than loans, Bank Negara Malaysia also will invest uh, to gather incomes. Okay, so usually they invest in government security. MGS is stand for Malaysian Government Security, or they will also invest in repurchase agreement, repos. Okay, repurchase. So if other financial institution issue repos, BNM will buy, invest in the repos in short periods. In 2 weeks times, bank will get their money back will with interest rates. Okay, okay. Okay, this slide you can see how the assets, you can see just now what I mentioned in last slides. You can see all the asset actually the uses, okay, the uses of fund by central banks. They lend the money, they invest. You can see most of the uses of fund at the reserve. Okay, you can check the gold and foreign exchange reserve. Okay, that's why if you want to invest in gold. You can see central bank also, they put a lot of money in gold reserve. Okay, and liability part, you can see the liability part is the sources of fund for central banks. Okay, you can see bank negara paper. Okay, they also get liability from deposit. You can see the highest is deposits from other financial institutions. That's the main sources of fund from the central banks. And capital, 100% capital, 100 million capital is come from the governments. Okay, class, this slide to show you that's how central banks get power to supervise all the financial institutions in Malaysia. Okay, I think you can read by yourself. Central Bank of Malaysia, this one, when the establishment of central banks, they can based on the Central Bank of Malaysia. So in this act, it provides BNMs how to do their administration works, and to highlight the objective and function of BNMs, okay, and what is the duty of the central banks, Bank Negara Malaysia. So we also have several acts update from time to time. Okay, previously, if you heard about BAFIA, BAFIA, that one is all acts related to financial institution. But now BAFIA, they upgrades, they improve the acts to separate between Islamic financial service and also conventional service. So no more BAFIA, the updates to the Financial Service Acts, which is related on the BNM can license and regulate all financial institutions and bankings. Okay, this is related to conventional services, conventional banks, commercial banks, for example. And if the banks or if the financial institutions offer the Islamic banking products, so they need to fulfill the requirement under Islamic Financial Service Act, IFSA. Okay. Previously, these two acts under one act, but now they improve. Okay, they separate. Okay, so we also have Money Service Business Acts. So this acts regulates for that give license to the regulation and provisions of the money service business. For example, for the money exchange. Okay, money exchange. So money exchange yang the kiosk one, they need to follow this. Okay, and then insurance acts, we also have insurance acts and also takaful acts. Okay, insurance acts, all insurance company, they need to fulfill or license under these acts. Okay, and lastly, development financial institution acts. Okay, if you read, okay, if you read detail, these acts not highlight that central bank give license to them. Okay, they are not licensing by central bank, because institution DFI, development financial institution, usually they are established to establish and improve certain sector. That one is by government's intention. So they are regulated by the government, Ministry of Finance. Okay. However, this act, DFI Act, to ensure the BNM also play their roles to ensure that the DFI, which is regulated or licensed by Ministry of Finance, they perform their operations, which is to achieve the goal of the establishment of DFI. Okay. Okay, the rest of the slide you can read. Okay, and please watch the video for the clear view or understand more about money laundering. Okay, thank you. About, okay, okay, this slide is about you can read by yourself. Okay, and then the other slide also about money laundering acts. Okay, you can read and you can please watch the video. Okay, and understand what or how the process of money laundering. Okay, thank you.